which is the fuel prices and the increase in Kenya. Our correspondent in Kenya, Alex Kairie, joins us. Alex, good to have you with us. Now, we do understand that the price jump in petroleum products is linked to the Israel-Iran escalation. How much is this costing Kenya to actually import these products? Welcome.
Thank you very much. I think it's just fair to set the record straight. If you look at CNN reports and all these international media reports, it's been almost 2 weeks after Israel ended its conflict with Iran, and the prices of oil internationally have dropped marginally. But we are seeing the same here, the opposite here in the country, and it's really making everyone wonder, because it has actually never been cheap to import oil into the country as per the agreement that Kenya had with these three Gulf states, which is Saudi Arabia, Abu Dhabi, and United Arab Emirates. The price of oil internationally, as per our imports, as per that agreement, has always been between $84 per barrel and also around $76 to $78 per barrel. So it has always been a very expensive effort to do that, and or since that deal was signed between the three governments and the government of Kenya. So the issue of Israel-Iran conflict does not wash, and so many people are raising that issue here because of the current situation in the country politically, and they're feeling like the government is just fleecing companies and individuals, basically manufacturers and motorists in the country.
So are you saying that geopolitics is not as huge a factor as it is said to be?
It is not. Actually, we have been importing oil at premium prices since that deal was signed under the Uhuru Kenyatta government, and recently it was actually extended to 2027. So it is nothing to do with the geopolitics or the conflicts in the Middle East. It is actually because we are paying our oil in rather later. We are importing our oil on credit, so we pay premium based on that fact that we pay actually around 6 months after importing and utilizing the fuel in the country.
Let's look at this price escalation over the past few years. This is the largest increase since September 2023. How does this compare to the previous price hikes for petroleum in the country?
If you compare the current prices, which is around 185 shillings per litre for petrol and 166 shillings for diesel, it is slightly lower than what we had witnessed under the Uhuru Kenyatta government pre-COVID period. I remember the price of petrol had risen up to 205 shillings in 2019, 2018. And then it came down after the president imposed a ban on fuel prices. Actually, he reduced it further to around 160 shillings because of the COVID situation in the country. But the price has been escalating since then. After the restrictions were lifted, the price has been steadily rising, and after Ruto took over, he also managed actually to stabilize the prices. But in the recent past, after the protests that happened from last year, prices have been rising steadily, and many are actually tying this to the fact that he is creating a crisis, then benefiting from it by letting us actually focus on one thing as he does another. Just like we saw recently when the protest happened in July 7. We saw, as people were focusing on the killings, we saw the new electoral body being sworn in, which was against the law because there was a freeze on the same by our local court. So this has actually got nothing to do with the geopolitics and the conflicts in the Middle East. It has certainly much to do with the policies and the government deal that it entered into with those three countries that I mentioned. That's Abu Dhabi, UAE, and also Saudi Arabia.
From the proposition that you're putting forward, it sounds like there is no end in sight, and that there will continue to be escalation of prices as far as petroleum is concerned. What has been the reaction of activist groups on the ground? What has been the reaction of business and citizens alike?
Anger and actually frustration. Many actually in today's media houses are questioning the rationale behind raising the cost, because we are already buying this oil at a huge price, expensive price, and they do not understand why. However, you need to realize that in Kenya, the cost of fuel is actually escalated by the levies and taxes imposed, or the same after import. If you look at the price of oil in the country, that at the landing cost, it's around 76 shillings, actually less than 100 shillings. But the levies and other taxes make the whole liter cost over 181 shillings, which is quite high. So it's not about the cost of fuel per se, but it's about the tax regime that we have in this country that is actually making everyone so angry and frustrated, which is actually leading to so many companies actually scaling down and leaving the country altogether.
That almost doubles the import cost after putting the levies and taxes in place. Have there been efforts to review or revise these taxes to make petroleum more affordable?
Not really. What happens is that whenever oil prices rise at that scale, whenever there is some complaints and maybe a backlash from the members of the public, in the next review, maybe they'll reduce it by around 100 or 1 shilling, 2 shillings, and then we move on with life. But so far, it is a very frustrating thing for investors and even for anybody else in the country, because a high cost of fuel means that everything else is going to definitely double in terms of cost because of the cost of production. There is so far no plans to reduce this, because Kenya's other options for raising funds to run the government have marginally shrunk due to the corruption and the fact that so many people are now jobless and other companies are leaving the country. So the only other big option is, of course, leaving the fuel that we import in the country.
Alex Kairie, we thank you very much for your insight, as well as putting all of this into perspective as far as the reasons behind these very steep petroleum increases in Kenya. We thank you for your time.
Thank you very much.
Thank you. That's our correspondent in Kenya, Alex Kairie, and he takes us to exactly 20 minutes after 4 p.m. Do stay with us. This is Africa in Business.